Kia, and I'm a Divine Elements of Design in the Decorator's Voice. I'm a certified interior decorator, professional organizer, and planning and productivity strategist. And if those are topics that you're interested in, please subscribe to this channel and hit the bell for notification. On this video, I'm going to give you 7 easy ways to pay off your mortgage in half the time. Now, I am not a financial guru. I'm just someone that have did things right and wrong. And I would like to just share some of my experiences with you. Now, this is only the second financial video I've ever posted on my channel. But if finances are something that you're interested in, leave a comment in the comment section below and I will post more of these financial videos. So for this video, I'm going to work with you on an example of a home. Now, the home that we're going to pretend to purchase is a $300,000 home. We're putting 10% down, which is $30,000, and we have an interest rate of 3.5%. Now, I just picked $300,000 because I thought that would be a nice number. I know in Texas, you can get a home like this for $300,000. However, in California, you probably can get a home like this for $300,000. But anyway, that's just an example that I'm using. That way we can go forward and we can see, the different avenues and different ways we can pay off this mortgage faster. First of all, if you are not familiar with the way mortgages work, there's actually 3 parts in a monthly mortgage that you will pay. It's the principal, interest, and escrow. I'm not going to dwell into this part too much because I want to get straight into the ways of paying it off. But the escrow is actually part of the property tax that you pay and then your homeowner's insurance. So that can fluctuate. But as long as you don't have an adjustable rate mortgage, your mortgage percentage should be fine. So we're going with a 3.5%. For this example. Also for this example, we are not going to have any type of HOAs. So what the principal and the interest for the home would be $1,212 a month. However, remember we're going to take in consideration the escrow. So we're doing $250 for homeowners insurance and $500 for the property tax. So that's going to give us a monthly mortgage note of $1,962. So if we bought this home today, our first mortgage payment will be due on February 24th of 2022. So the payment will be $1,962. And of course, only $1,212 of that is going to go until the actual part of your mortgage. Now, the first month, when you actually pay your very first month's mortgage, you're so excited, you have a home, congratulations. Only $424.50 of that very first payment of almost $2,000 is going to go to the principal of your home. Yes, $787.50 is going to interest. Now, mortgage interest is not like any other interest. The mortgage banks, they want their money and they're going to get it up front. So they are in the business of getting all of their interest. So the next month you're thinking, okay, well maybe, a little bit more of my money is going to go towards the principal because that's, your home. No. The next month, only $1 more is going to go towards principal. $425.74 is going to go towards the principal. Your balance is still $2,600. Your balance is still $269,149. You've already made 2 months mortgage notes of almost $4,000 because it's pretty much $2,000 each. So as you see, this is why it takes 30 years to pay on a mortgage because you have to pay all that interest before you even get to the principal. So yeah, those banks, they're killing it. They are, they know what they're doing and that's how they're in business. And we're going to talk about some of the other shady things that the mortgage companies do. That's going to be a little bit later on in this video. But anyway, I just want you to know that that's how it works. So with the principal and interest, it's actually like a seesaw. So the first pretty much half of your mortgage, you're going to be making all interest payments, or pretty much almost all interest payments. If you're paying almost $800, this is going to interest, and a little over $400 is going to principal. I mean, that's twice as much. So yeah, so in each month, the teeter just moves just a little bit, you know. So you're not going to get to the halfway mark until, let's see, 2032. That is 10 years, and you're just at the halfway mark. You are just paying on $600 of that $2,000 is going towards your principal. So I wanted to really let you understand how that part works, so you can understand how it takes so long to pay a 30-year mortgage off, and why these techniques I'm going to give you are going to help you pay your mortgage off even quicker. Okay, so the first thing I recommend doing is the bi-weekly mortgage payment option. When I did it, you know, I bought my home like a million years ago, 2003 actually. And I was a little bit leery about it. The mortgage company, you know, gave us the paperwork and they said, hey, we have this third-party company and it's a cost. It's like $350. But what you do is you pay them your mortgage, you know, bi-weekly. I get paid bi-weekly, so it was perfect. So basically, you know, half of the mortgage. So let's just use round numbers. Let's just say my mortgage is $1,200. So I would give them $600 each paycheck. But you have to kind of be a month, half a check ahead. You can't give them a check January 1st and January 15th for the December check, December mortgage. It doesn't, January mortgage. It doesn't work like that. So you actually kind of have to be ahead. But when I first thought about it, I'm like, $350 for y'all to do what I can do it myself. But I actually did their way, and it worked for probably about 7 or 8 years. And then the company folded and went out of business for whatever reason. So I had to make the bi-weekly payments myself. But once again, you cannot send your mortgage company half a payment. You have to send them a whole payment. So what I did was I had half of my mortgage come out of my paycheck and went to a separate account, and then the other half went to that account. And then when it was a full amount, I paid my mortgage. Now what that does is your mortgage will get 2 extra payments a year. That's 2 extra full payments. So in our example, the mortgage is $1,962 a month, but really we know only about $400 or $500, maybe even $600 in year 10 is going to go towards the mortgage. But if you have 2 payments of $1,962, that's going to go directly to the mortgage, just by doing bi-weekly, you're going to cut off years. So instead of our original loan payoff amount of January 24th, 2015, just doing bi-weekly alone, your mortgage payoff will be November of 2042. You've taken off 10 years just by doing what you were going to do automatically. So that's one thing. So I actually recommend doing all of these things if you can. So the second option is to just pay a little bit extra each month. So we know that the mortgage payment is $1,212. So if you take that $1,212 and divide it by 12, it's $100. And what that will do is, in addition to the 2 payments that you're going to have with the bi-weekly, you're going to add another one, because $100 a month times 12 months, it will actually be a little bit more because you're doing this bi-weekly. But what that's going to do is take off 2 years from your mortgage. So now your mortgage will be paid off January 24th of 2040. That's even better than 2042, and definitely better than 2052. Because let's think about it. A 30-year mortgage, your kids, little Tommy, little Stacy, they're going to be grown and have kids of their own, and you're still going to be paying off a mortgage if you do a 30-year mortgage. So those are 2 options, the first 2 options. The second or the third option is increasing the amount you put in your escrow. So when I purchased my home in 2003, the house was built. So the first year we was taxed on the land only. And it really messed me up because it was only paying the escrow for the land only. That next year we found out we had an escrow shortage. So I ended up having to pay more. It was almost like, well, pay $3,000 like right now, or your mortgage is going to go up like by, $500 or whatever it was. And it was a crazy amount. So in order to avoid that, what you could do is put a little extra in towards your escrow, just a little extra cushion. They give you a little cushion, but they don't know what your tax is going to be. So add a little extra, even if it's $50. If you added $50 extra, which is maybe going out to eat, a weekend or something. So just don't go out to eat one weekend. Just make sure that you have that $50 extra to go to your escrow amount. At the end of the year, after they do their, readjustment, they will return that money to you. And I know a lot of people say, well, why give them that free money? But the goal is to pay off your house, and we're not going to worry about interest on $50 if you kept it, at Chase Bank or in a shoebox under your bed or something. We're trying to get this mortgage paid off, So that $50 will make sure you don't have an escrow shortage, and then if there's anything extra, they'll refund it to you. Take that extra they refund to you and put it on the principal. When you're making extra principal payments like this, make sure you let them know it's for the principal. If you can pay online and you can designate a spot for principal, do that. Never pay ahead on your mortgage. Anything extra needs to go to principal. Okay, the fourth option or the fourth thing is bonuses and gifts. I don't know about your job. I don't know what you do. I don't know how your family are, if they give cash gifts or anything like that, or if your job gives you cash bonuses. But if they do, at least half of your bonus, I don't care if it's $100 bonus or $1,000 bonus, anytime you get some money, and if you're interested in paying off your mortgage, and if you're passionate about paying off your mortgage, take half of that, whatever it is. If you can do more, go ahead. But at least take half of it and put it towards your principal. You will be so surprised if you see how just, minor little things add up. It really adds up. The fifth one is your income tax return. If you get an income tax return, if you get a stimulus payment, if you get anything like that, you're on using it anyway, send it straight to your mortgage company. Principal payments. We're trying to knock down some years. We want to get this house paid off before little Timmy goes to college, not when little Timmy sends his child to college. Okay. The other thing, now I personally would not do this, but a lot of people do this. It's getting a HELOC, and that's a home equity line of credit. Now, what they'll do is, first of all, you have to have equity in your home. Your home has to be valued much greater than what you owe. And what you do is you'll take a HELOC, that's a home equity line of credit loan out, say for example, $20,000. And the interest that you pay on the HELOC is a whole lot less than the interest that you're paying on your home. So you take that $20,000 for the HELOC and you put it on your mortgage as a big principal only payment. And it takes off years. And you still have to pay that $20,000. So depending upon your interest, that may be just a couple of $100s a month. But that money that you are going to be paying a month is a whole lot less than what you were normally paying with your mortgage. So some people do that. Personally, I would not have did that. It's kind of like those robbing Peter to pay Paul things. I'm like, no. Okay. The seventh thing. Now, listen to me. I understand that sometimes life gets in the way of our plans. I understand sometimes there may be a divorce. We may have an elderly parent that has to go somewhere. We may have an accident or something. We may lose a job. I mean, life does get in the way. There could be a pandemic. Hey, things happen. And we may be behind on our mortgage. So what mortgage companies do is they give you this option to modify your loan. They claim they're helping you out. Once you're 3 months behind on your mortgage, they're like, hey, we don't want you to lose your home. You've been in your home a couple years. You know, I'm going to give you this modification. Fill out this application, yada, yada, yada. You don't even have to pay anything. We're going to put the payments on the end. Three months of your mortgage, they're going to give you. They're going to put it on the end of your loan. That's the whole mortgage amount. You know, your principal is only a small chunk. So 3 months of your mortgage is going to add years to your loan. If you do this every time something bad happens, you're going to end up owing more on your home than you originally bought it for. Because there's fees, there's legal stuff, there's a lot of different things that go in those modifications. And those modifications are basically traps by the mortgage company to get you to stay into their loan. I don't know if you're aware of this, but the word mortgage, the first root of the word mortgage, mort means death. Gauge means, the second part, I forgot what it meant that fast, but it's like a death grip. That's what I was told by the lady who helped me with my mortgage, 20-something years ago. She was like, it's a death grip, because these banks, they know you're going to be in this till you die. And we're not trying to do this. We're more educated now. We have YouTube, we have bloggers, we have influencers, we have people, financial gurus that can tell us these things so we won't be behind. There was a time that I almost had to do a modification when my escrow got all crazy, and I'm like, oh my God, and I just bought a car. And I was like, oh my God, what to do? And I'm so happy I did everything I could not to get a modification. I did mystery shops, I sold things, I did everything. And that's what I suggest to you. Before you do a modification, if you have a TV in your home, sell that TV. If you have some jewelry or whatever, do whatever you can, but do not do a modification if you can. I understand certain situations you may have to, but if it's just like a one-time thing, do whatever you can to not have a modification. I know people that get modifications because they want to go on a trip and they don't want to pay their mortgage that month or 2 months. They're like, 3 months of mortgages is $5,000. I can use this to go on a vacation. I can use this to do something. No, because what you're doing is you keep moving that, wheel back and back and back, and you're never going to own your home. So I really hope you enjoyed these 7 tips or 7 easy ways to pay off your mortgage. I know some of things may seem easier said than done. The bi-weekly mortgage, that is easy. It's not easier said than done. It's easy, especially if you get paid twice a month or every other week or whatever. But that's definitely something that you should try. Any little extra money. I'm in a Facebook group, and I will put a link to it below. It's called the Mortgage Payoff Challenge. And it's from people all over the world, and they're all striving to pay off their mortgage. And you can stay in a group after you've paid off your mortgage. Just encourage other people. So there's all different types of people in there, and they talk about different ways they're paying off their mortgage. They talk about HELOCs. They talk about everything. So I will leave a link to that in the description box below. But it's really good because it's encouraging and it's supportive, and then it's also that accountability. Because a lot of times, if you're passionate about your finances and you're trying to do something positive, you may not have the family and friends that are going to help you or push you. In fact, when you pay off your mortgage, you don't really have no one to tell, because people are going to be like, oh, wow, that means you have an extra $2,000 a month. But it's not like that. So in the group, you can actually, express yourself, get advice, give advice, and things like that. So I hope you enjoyed this video. It's a different type of video. If you are interested in financial videos, I can start making some of those. I thought about making a video about the FIRE movement, which stands for Financial Independence Retirement Early. So if that's something that you're interested in, let me know in the description box, in the comment section below. So please give this video a thumbs up. Thank you very much for watching. Have a good day. Bye.